Hi, welcome back to the channel. In this episode, I'd like to talk to you about what's happening in the Russian economy. I'm sure you'll know that Russia has severely limited the amount of data that it's prepared to release to the West. It sees that as potentially being a sign of weakness. However, S&P, the ratings agency, does follow Russia and it publishes a monthly report looking at a number of vital aspects of the Russian economy. And I wanted to go through the findings of the latest report. I've actually put a link to it in the description below because a lot of people message me and say, why don't you ever put any links to the information that you're talking about? So if you want to check it out for yourself, then please feel free to do that. But the point of these videos is really for me to explain to you what's going on. So if you're going to read the report yourself, then you may as well stop watching now. And actually, while you're on the topic of people watching, I wanted to just mention that I've got a new camera set up for this video because I got some feedback from the previous camera that there was a slight lag in terms of the visuals. So I've upgraded the camera. Hopefully you can notice a difference. If you can't, then apologies for mentioning it. Actually, while we're on the topic of the channel, can you subscribe if you haven't done so already? Because really interesting statistic for you here. When I went down to Australia and did a number of live streams, since I've been posting live streams, I've lost around about 1,000 subscribers. Now, I don't know whether or not those two factors are related, whether people just hate live streams or whether they just hate me these days. But if you haven't subscribed yet and you're watching this and you think, well, why not? Hit that subscriber button because it does help me with the algorithm and also just puts a smile on my face. So this report from S&P goes through a variety of different factors, and what it's found is that there is currently a weakness in terms of business, costs are rising, employment is falling, and there is a lack of confidence in the Russian economy. So this tells us that the sanctions are continuing to hurt the Russian economy, although it's switched itself over to being a wartime economy. That is not going to help Russia over the long term. Russia has been built on oil and gas exports. Those oil and gas exports are now severely limited as a result of the sanctions, and the situation is getting worse on a daily basis. So let's go through the findings in this report because I think it's quite fascinating to have a look at it. So the first thing that S&P have highlighted is the Purchasing Managers Index. Now, the Purchasing Managers Index is basically a survey of all of the purchasing managers. And a purchasing manager is somebody at a company in Russia who's purchasing in all of the raw materials and everything that's needed to produce things. So those guys are basically the gatekeepers as to what's going on. If they're increasing the amount that they're purchasing, then that means that the company is expanding, it's taking on more raw materials, which it's going to produce more end product from. If it's contracting, then the opposite is happening. The company is obviously not expanding. And the key metric here is the benchmark of 50. So 50 tells us that there is status quo, neither any expansion nor contraction. And in January, the Purchasing Managers Index in Russia came in at 49.4. So that's below 50. So it tells us that companies in Russia, on average, are contracting. They're buying in less raw materials and less goods and services for their manufacturing processes than they were in the past when things were going better. So that tells us that the corner has not been turned by Russian companies. Now, the next thing that's highlighted in this report is the impact of the increase in VAT. The Russian authorities announced an increase from 20% to 22%, which took place on the 1st of January 2026. So I think everybody's familiar with the concept of VAT. It's added to the price of goods when you go to the tills to buy it. So a 2% increase is obviously going to increase prices across the board by 2%. However, the situation is actually worse than that because it's not just end prices that VAT applies to. It applies to absolutely everything produced in Russia. So if you're a company in Russia and you're buying components or parts or supplies from another Russian business, then those input prices will also be going up by 2% because when you buy from one company to another company, you have to pay VAT. So input prices are also going up. And as a result of that, Russian businesses will want to increase their end sale price by more than just the 2% because they're going to need to cover their increased costs as a result of this increase in VAT. So the bottom line for consumers in Russia is that we're likely to see not just a 2% increase in prices, but potentially 2 to 3% as a result of the flow through of all of this VAT. And what that's going to do is put further pressure on inflation. And inflation is an ongoing problem in Russia. It's now down to around 5.6%. So it's coming back towards that target rate of 4% set by the Central Bank of Russia. However, with this increase in VAT, that's going to push prices up again, and we may see inflation starting to rise. And if it does, then that will mean that interest rates will have to remain at an elevated level. They're currently sitting at 16% in Russia, which is completely prohibitive in terms of companies and individuals wanting to take on any debt. And that's causing a contraction in the growth of the Russian economy. So the increase in VAT will represent bad news for 2026 for Russia. But it's not just VAT that's causing problems. S&P have also highlighted that there is now weak demand in the Russian economy, and new orders for products from Russian businesses are still falling. And they're falling at their fastest rate since June of 2025. So that's now 6 or 7 months. So things are not improving in terms of just general demand. And as a result of that, S&P have also highlighted that employment has declined at the fastest rate since the middle of 2025. And companies in Russia are now actively cutting costs. So they're laying off people and they're also cutting back on their costs. And another problem that S&P have highlighted is that exports, which are the lifeblood of the Russian economy, that's what Russia does. It's got so much in terms of raw materials that it's one of the world's largest exporters of base products. But unfortunately, because of the sanctions, those exports have been reducing significantly over the past 4 years. And S&P has highlighted that exports are now weakening again. And this ties in with the decline in new orders. And the problem that that causes for Russia isn't just from an income perspective. It also means that Russia won't be getting in as much foreign currency, which it needs because nobody wants to deal in the ruble. The ruble is basically a dead currency. Only Russia is interested in the ruble. Nobody else, not even China and India, who are the two biggest trading partners for Russia, are prepared to deal in rubles. So if Russia isn't making its exports, it's not being paid in Chinese yuan and dollars and euros and any other currency that's useful for Russia. And that's going to be a problem because Russia is still importing a huge amount of products and it needs foreign currency to pay for those imports. One of the other things that's been highlighted in this report is that Russian companies have been running down their stock levels. So any sales that they have been making, they've been making them from stock. And that's going to be a problem because if demand suddenly does turn up again, and we see an increase in retail sales in Russia, then Russian businesses won't be ready to take advantage of that because they're running their stock levels down. And this all ties in to supply chain and logistics issues that are also being highlighted by S&P in their latest report. And finally, they've highlighted that business confidence is still very fragile in Russia. So the overall summary of S&P's findings is that manufacturing in Russia is still contracting. The VAT increase that came in at the beginning of 2026 has pushed up costs and prices, not just for Russian consumers, but also for Russian businesses. That will apply further pressure onto inflation, which is an ongoing problem for Russia. Demand is now weak and has remained weak for some time. Jobs are being cut in Russia. Exports are falling. Inventories are being run down and confidence is highly fragile. So this basically tells us that the Russian economy isn't stabilizing. It is still struggling to cope with the impact of the sanctions. And all of this is bad news because Russia continues to spend more than it's earning. So it's creating a budget deficit. That deficit is having to be funded firstly by the National Wealth Fund, which is now almost depleted. and is now being supplemented by the sale of gold. Well, gold prices are running at really high levels at the moment, so it's a good time to sell on average. However, you can only sell the crown jewels once. And if Russia continues to deplete all of its gold reserves, then at some point further down the track, it's going to run out of cash and need to have to raise more debt. And that's something that we've talked about in previous videos. Russia is now looking to China to try to place bonds in Chinese yuan to attract in Chinese investors. However, the reaction to that has not been well met so far. And so Russia may find that nobody actually wants to buy its debt. So the overall summary of today's video is that the findings from S&P in January show that the Russian economy is still struggling significantly with the sanctions, and in fact, the situation is getting worse on a monthly basis. So hopefully you found today's video useful, informative, and most importantly, thought-provoking. That's what I'm trying to do, provoke some thoughts for you to start thinking about things in different ways. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget, I'm currently running my competition whereby you can win my property located close to one of the best beaches in the UK. The reason I'm doing that is it's another way of funding the channel. So please get involved if you can. If you'd like to buy a ticket for that competition, have a look at the QR code on the screen now, or the link in the description below. It'll take you through to the independent company that's hosting that competition for me. So please get involved. That would be fun. Thank you also to everyone supporting me in other ways. If you've bought me a coffee, I really appreciate that. Or you've bought me a YouTube super thanks, so welcome. Thank you so much. Really, really does help me to keep going. And if you've signed up as a member, YouTube member, which I'm now up to around about 400 members, which is the record level that I've had. So thank you so much to every single one of you that signed up. Or a patron, and I've got around about 300 patrons. So thank you if you're one of those patrons. You can see my videos advert free over on Patreon. Thank you so much for that long-term support. Really helps to keep me going. And here's something to put a smile on your face.